All right, so let's dive right in. Today we're going to take a deep dive into the world of fragrances and flavors.
Ooh, okay.
Yeah, with SH Kelkar and Company.
Okay.
They are like a major player. I mean, they're the largest Indian origin fragrance and flavor company in India.
Really?
Yeah. And they have a history that spans like over a century.
Wow.
So they just released their Q2 FY25 financials.
Oh, wow. Okay.
And we're here to break it all down for you. We've got their press release, earnings presentation, and a letter to shareholders announcing the board meeting where these results were discussed.
What's really fascinating here is that these results give us like a glimpse into how a company with such a long legacy
Yeah.
is navigating, the modern market.
Exactly. And the first thing that jumps out at me is their strong revenue performance.
Oh.
They crossed the 1,000 crore mark in total income for the first half of the fiscal year,
Wow.
which is an 18.3% jump year over year.
That's incredible.
But what I'm really curious about is what's driving that growth. Is it just like a rising tide lifting all boats in the fragrance industry, or are they outperforming the competition?
That's a great question. And looking at the details, it seems like it's a combination of factors.
Okay.
There's definitely healthy demand across the fragrance and flavor segments.
Yeah.
But SH Kelkar and Company is also strategically positioned to capitalize on that demand.
Yeah.
They've been recovering their order backlog from the fire incident at their Vache facility last year, which we'll discuss a bit later. They're also seeing some serious momentum in their European segment with double-digit growth,
Wow.
despite the economic headwinds in that region.
So speaking of Europe, I noticed their expansion efforts there seem pretty ambitious.
Mm.
They've got a new Creative Development Center, or CDC as they call it, opening up in Manchester, UK.
Right.
Is that part of a larger strategy to target international markets?
Absolutely. It seems they're recognizing the growth potential outside of India
Okay.
and making significant investments to tap into those markets.
Gotcha.
These CDCs are designed to attract top talent in the fragrance world,
Yeah.
boost their innovation, and create products specifically tailored to those regions. They already have one in Germany.
Mm-hmm.
So adding another in the UK shows a real commitment to European expansion.
It makes sense, but these investments have to be impacting their financials somehow, right?
You're right.
Yeah.
While their revenue is strong, their gross margins have taken a bit of a hit due to a shift in their product mix.
Okay.
And there are incremental costs associated with these growth-led investments, particularly in Europe and the US.
So it's a bit of a balancing act.
Yeah.
They're investing for future growth, but it's impacting their profitability in the short term.
Right.
Speaking of profitability, their EBITDA margins, or essentially how efficiently they're turning revenue into profit, are sitting at 16.8% for the first half of FY25.
Okay.
It's up slightly from 16.2% previously, but it makes me wonder if that's enough given their ambitious growth plans.
It's definitely a point worth considering. And to get a clearer picture, we should look at how each of their segments is performing.
Okay.
Let's start with their core fragrance division. It seems they're seeing healthy revenue growth there, driven by higher volumes, and as we mentioned earlier, the recovery of that backlog from the Vache fire.
And what about their flavor segment? It seems like that's been a strong performer for them lately.
Yes, the flavor segment is carrying forward its positive momentum from the first quarter of FY25. They're attributing this to a market revival and increased engagement with both existing and new customers. What's particularly interesting is that the flavor segment is also showing strong profitability, which is a good sign.
Now, before we dive deeper into each segment, let's talk about the elephant in the room, the Vache fire. It seems to have impacted their operations and financials significantly.
Yeah.
I remember reading that the estimated loss from the fire was quite substantial.
You're absolutely right. The fire resulted in a significant loss impacting both their property, plant and equipment, and their inventories.
Wow.
The total carrying value of those losses is estimated to be around 160.18 crore.
Wow.
However, they've filed an insurance claim and are expecting a settlement within this fiscal year. They've even requested an ad hoc interim payment of 50 crore to help address immediate needs.
So while it was a major setback, it sounds like they're managing the situation proactively.
Yes.
They're minimizing production disruptions, pursuing their insurance claim, and working to recover.
And it highlights how important a robust risk management plan is,
Yeah.
especially in an industry that deals with potentially hazardous materials. But despite this setback, they're still pushing forward with their growth plans, especially in Europe.
Okay, let's get back to their geographical performance. They broke down their revenue by region, India at 59%, Europe at 25%, and the rest of the world making up the remaining 16%. But you mentioned earlier that Europe was seeing double-digit growth.
Yes, their core European business is showing an impressive 11.5% growth on a like-for-like basis.
Wow.
And what's even more impressive is that this growth is translating into solid profitability. Their European operations boast gross margins of 57.3% and EBITDA margins of 20.4%.
That's quite a contrast to the slight dip in their overall gross margins.
Yeah.
What's driving that difference?
It seems like a superior product mix in their European operations is contributing to those healthy margins. They're likely focusing on higher value products that command a premium price in the European market. This strategic approach to product selection is likely playing a key role in their success there. It's a smart strategy, especially considering the mature and competitive nature of the European fragrance market. They're not just trying to compete on price, they're offering something unique and high quality that resonates with European consumers.
Now, we've talked a lot about their fragrance and flavor segments, but I'm curious about their global ingredients segment. If I remember correctly, they've been working on turning that segment around.
Yes, their global ingredient segment has been a bit of a challenge in recent years, but it seems their efforts are starting to pay off. They've implemented structural initiatives, optimized their operations, and enhanced efficiency. And those efforts are reflected in the numbers. Both their top line, which is their overall revenue, and their EBIT, or earnings before interest and taxes, are showing positive improvements.
So they're firing on all cylinders, so to speak.
Yeah.
They've got their core fragrance division performing well, the flavor segment exceeding expectations, and their global ingredient segment on the rebound. But how are they managing to achieve this growth in a market that's constantly evolving? I mean, consumer preferences change, new trends emerge, and the competition is always fierce.
You're absolutely right. Adaptability is key in this industry.
Hmm.
And from what I'm seeing, SH Kelkar and Company is taking a multi-pronged approach. They're investing in innovation, as we saw with their new CDCs. They're diversifying their product portfolio to cater to a wider range of tastes and trends. And perhaps most importantly, they're focusing on building strong relationships with both existing and new customers.
That makes sense. You can't just rest on your laurels in this business. You have to be constantly looking for ways to stay ahead of the curve. And speaking of staying ahead of the curve, they mentioned in their shareholder letter that they've been actively developing new molecules and even filing patent applications.
That's a great point. It shows they're not just following trends, they're trying to create them. They understand that innovation is crucial for long-term success in this industry. It's like a chef constantly experimenting with new flavors and ingredients to create the next culinary masterpiece.
Okay, so we've covered their financial performance, their segment breakdown, their strategic investments, and even their approach to innovation. But I want to circle back to something you mentioned earlier, their focus on building strong customer relationships. Can you elaborate on that a bit more?
Absolutely. They highlighted in their report that they're seeing strong momentum among their small and mid-sized clients, both existing and new. While the larger established accounts might be experiencing some slowdown, these smaller clients are driving growth. They even mentioned a key global MNC client that's contributing significantly to their revenue.
So they're not putting all their eggs in one basket.
Right.
They're diversifying their client base and tapping into new avenues for growth.
Exactly. And that seems to be a key part of their strategy. They're not just relying on a few big clients to drive their business. They're building a more sustainable model by nurturing relationships with a diverse range of customers.
This reminds me of how craft breweries are disrupting the beer market. They're not trying to compete with the big guys head on. Instead, they're focusing on niche markets, building loyal followings and offering something unique that the big guys can't replicate.
That's a great analogy. And it highlights how important it is for businesses to understand their target market and tailor their approach accordingly. SH Kelkar and Company seems to understand this well. They're not just trying to be everything to everyone. They're focusing on what they do best and building strong relationships with the customers who value that expertise.
Now, despite their overall strong performance, they did mention that domestic demand in India remains soft. How are they planning to address that challenge?
It seems they're taking a two-pronged approach. On one hand, they're continuing to invest in innovation and product development to cater to evolving consumer preferences within India. On the other hand, they're actively pursuing growth opportunities in international markets, as we've seen with their European expansion.
So they're not just waiting for the domestic market to rebound, they're proactively seeking out new avenues for growth.
Exactly. And this proactive approach seems to be working in their favor. Their strong Q2 results are a testament to their ability to adapt to changing market dynamics and seize opportunities wherever they arise.
Now, before we wrap up our discussion on SH Kelkar and Company, I want to touch on one more thing that caught my attention. They mentioned their net debt has climbed to 592 crore as of September 30, 2024, mainly due to ongoing inventory replenishment.
It's certainly something to keep an eye on.
Yeah.
However, they're projecting strong cash flow generation in the coming months, which should help improve their balance sheet. Plus, they're still waiting on the insurance settlement for the Vashivali fire, which should provide a significant financial boost.
So while their debt level is a bit elevated right now, it doesn't seem to be a major cause for concern. They appear to have a solid plan in place to manage their debt and maintain a healthy financial position.
Yes, and it's important to remember that they're making these investments during a period of significant growth. They're expanding into new markets, developing innovative products, and building for the future. So a certain level of debt is to be expected.
It's like taking out a loan to buy a bigger house because your family is growing. It's a calculated risk that can pay off in the long run.
That's a great way to put it. And from what we've seen in these Q2 results, SH Kelkar and Company seems to be making smart strategic decisions that are positioning them for continued success in the years to come.
All right, we've covered a lot of ground here. We've looked at their financials, their segments, their strategic initiatives, their challenges, and even their approach to customer relationships. But before we move on, I'd like to get your overall assessment of their performance and their future prospects.
Overall, I'd say SH Kelkar and Company is in a very strong position. They're demonstrating resilience in the face of challenges, they're making smart investments for future growth, and they're adapting to changing market dynamics. Their strong Q2 results are a testament to their strategic approach and their commitment to innovation.
But their success isn't just about numbers. They've been in this business for over 100 years. They've weathered storms, embraced change, and built a legacy of excellence. That kind of experience and expertise is invaluable in an industry that's constantly evolving.
Absolutely. And I think that's what sets them apart from any of their competitors. They're not just reacting to market trends, they're anticipating them and shaping them. They're thinking long-term, building a sustainable business model, and focusing on creating value for their customers, their employees, and their shareholders.
And speaking of the bigger picture, what do you think SH Kelkar and Company's performance tells us about the state of the Indian economy, particularly its manufacturing sector?
That's an interesting question, and I think their success offers a somewhat optimistic perspective. While there are certainly challenges in the Indian economy, particularly in the manufacturing sector, SH Kelkar and Company's performance suggests that there are also opportunities for growth and innovation. They're a prime example of an Indian company that's competing on a global stage, investing in research and development, and creating high-quality products that are in demand worldwide.
But remember, they also mentioned that domestic demand in India remains soft, right?
Yes, but their focus on diversification, both in terms of their product portfolio and their client base, seems to be mitigating that challenge.
Yeah.
They're not solely reliant on the domestic market for growth. They're strategically expanding into international markets and tapping into new customer segments.
So they're not just riding the wave, they're actively shaping it. And their success could be a model for other Indian manufacturers looking to navigate these turbulent times. It's inspiring to see an Indian company like SH Kelkar and Company
Yeah.
making such a significant impact on the global stage.
Mm-hmm.
But their journey also kind of raises some interesting questions.
Huh?
How might their strategic investments in new markets and product development shape the future of the fragrance and flavor industry, both in India and globally?
That's a thought-provoking question.
Yeah.
Um, Their expansion into markets like Europe and the U.S. could introduce new ideas and trends to those regions,
Right.
while also bringing back global influences to the Indian market.
Yeah.
It's potential cross-pollination of styles and preferences that could lead to some exciting innovations in the industry.
It's like a culinary fusion, blending different flavors and techniques to create something entirely new and delicious.
Mm.
And speaking of fusion, their focus on developing new molecules and filing patent applications suggests that they're not just following trends, they're actively pushing the boundaries of what's possible in fragrance and flavor creation.
Absolutely.
Hmm.
They're not just content with being a supplier of existing ingredients. They're striving to be a leader in innovation,
Right.
creating the building blocks for the next generation of fragrances and flavors.
Wow.
This could have like a ripple effect throughout the industry, inspiring other companies to invest in research and development
Yeah.
and push the boundaries of creativity.
It's like the space race, but for scents and tastes.
Right.
Everyone's trying to reach new heights of sensory experience.
Yeah.
And SH Kelkar and Company seems determined to be at the forefront of that exploration.
And their success could have implications beyond the fragrance and flavor industry.
Oh, really?
Yeah. Their strategic approach to diversification, innovation, and global expansion could serve as a model for other Indian companies,
Okay.
looking to make their mark on the world stage.
It's a testament to the potential of Indian businesses to compete and thrive in a globalized economy.
Hmm.
And their story is a reminder that success in today's dynamic marketplace requires adaptability,
Yeah,
foresight, and a willingness to embrace change.
precisely. And as we wrap up our deep dive into SH Kelkar and Company, I think it's worth reflecting on the key takeaways.
Okay.
Their strong financial performance is impressive,
Yeah.
but it's their strategic vision,
Right?
their commitment to innovation, and their focus on building lasting relationships that truly sets them apart.
It's a story of resilience, adaptability, and ambition. And it's a story that's still being written.
Hmm.
So keep an eye on SH Kelkar and Company. They might just be shaping the future of how we experience the world.
Wow.
One scent and one taste at a time.
That's amazing.
Thanks for joining us on this deep dive, and we'll catch you next time.